BHP Group is the largest diversified miner involved in the mining of iron ore, copper, steel-making coal, and more recently potash. Today, we will take a look at the company and also analyze their recent bid for Anglo-American assets. These are our own view, and we want to highlight the company so investors can make their own decisions. Financial metrics. Current share price, $56.30. Market cap, $143 billion. Price-earnings ratio, 19. Net debt, $11 billion. Dividend yield, 5.39%. Over the past 10 years, BHP Group share price ranged from $15 to $70. The current share price is near the top end of the range. Price has been consolidating between $45 to $70 for the last 4 years. For 2023, their revenue was $53 billion and their net income was $12.9 billion, and their underlying return of capital employed was 28%. Their earnings per share was $2.65. The company's strategy is to position the business to support the future megatrends. Copper for green transition, nickel for electric vehicles, iron ore and high-quality metallurgical coal for steel for new infrastructure, and potash for sustainable agriculture. BHP is predominantly an iron ore miner and majority of the cash flow is from iron ore. Most of their mines are in Western Australia in the Pilbara region, where they are also one of the lowest cost producers. They produced 230 million tons of iron ore here. They also have a 50% stake in the Samarco mine in Brazil, which produces high-grade iron ore. However, it is only running at 25% capacity after a tailings dam disaster. Revenue from iron ore in 2023 was $23 billion, and the return of capital for iron ore is 67%. BHP holds the world's largest copper reserves, and they have mines in Chile, including the Escondida, which is the world's largest copper mine. They also have copper assets in Australia. 2023 copper revenues were $16 billion with a 12% return on capital employed. They have high-quality metallurgical coal in Queensland, Australia. One problem with steelmaking coal is the move away from blast furnaces to electric arc furnaces. But it will be many decades before this happens. Their 2023 revenue from metallurgical coal was $10 billion with a 47% return of capital employed. BHP claims to have the second largest nickel sulfide reserves. However, their revenues from nickel was only $2 billion, and nickel prices have collapsed since their acquisition of Oz Minerals. Their nickel business is currently loss-making. In a move to diversify from iron ore, BHP is investing about $10 billion in potash mining in Canada. BHP in the past tried to take over Potash Corporation but had to withdraw the bid after opposition from the Canadian government. They have already invested in Jansen 1 project near Saskatoon, and first production is expected in 2026. They are also trying to go ahead with Jansen 2, and the final investment decision will be made in 2024. At the end of 2023, they had $22 billion in debt and about $12 billion in cash. So total debt is around $11 billion. They were almost debt-free in 2022, but debt has increased due to their acquisition of Oz Minerals in 2023 and capital investments in the Jansen project. They expect to spend $10 billion this year on capex and $12 billion in 2026 to increase their exposure to future-facing metals and potash. Before we look at the reasons as to why BHP would want to buy Anglo-American assets, let's take a very brief overview of the company. Anglo-American plc is a British multinational mining company headquartered in London, United Kingdom. It is one of the world's largest mining companies and is involved in the extraction and processing of precious base metals and minerals. These include diamonds, through its subsidiary, De Beers, copper, platinum, iron ore, coal, and nickel. The company operates across several continents, including Africa, South America, North America, Australia, and Asia. Their revenues in 2023 was $32 billion with 16% return on capital employed. We focus on the segments that BHP is interested in. Copper. Anglo-American owns 2 copper mines in Chile, Collahuasi, 44% interest, and Los Bronces, 50% interest, and the Quellaveco mine in Peru. Anglo-American produced 826 kilotons of copper from the mines, with a mining margin of 44% and revenues totaling $3.2 billion. Iron ore. They produced 24 million tons of high-grade iron ore from the Minas Rio mine in Brazil, and their revenues from this was $1.6 billion. There is scope for expansion of the mine to increase production. Metallurgical coal. They produced 16 million metric tons of coal, and their revenue from this was $1.3 billion. Their mines are based in Queensland, where BHP also mines metallurgical coal. So, why would BHP want Anglo-American assets? The most important thing here from the Muffett View is BHP's major reliance on iron ore. Although it is their most profitable commodity, there are some risks in this. Most of the iron ore is shipped to China. However, China is looking to diversify its iron ore supply from Australia in the current geopolitical landscape. China is importing from Brazil and, more importantly, is investing in an iron ore project in Guinea. The Simandou project in Guinea is 50% owned by Chinese companies in a move to de-risk China from geopolitical risks from the West. Simandou iron ore is high-grade and will be in premium demand in electric arc furnace steel production. The Simandou project will come online around the end of 2025. This will mean that less Australian iron ore will be needed. Rio Tinto owns a stake in the Simandou project and so is better placed than BHP. The slowdown in China is also a concern, but as outlined in our Rio Tinto analysis, there will be increased demand for steel in other Southeast Asian economies and India. BHP has a stake in the Samarco project, which produces high-grade iron ore, and synergies could be achieved by taking over Anglo's iron ore projects in Brazil. An economic war is currently underway between the East and the West. Steelmaking is a strategic asset for both sides. A lot of European steel mills are relocating to Brazil due to the high cost of energy in Europe and availability of high-grade iron ore in Brazil, which can be used in electric arc furnaces, which uses less carbon than conventional steel production. U.S. steelmakers are also expanding production in a strategic move to reduce reliance on Chinese steel. All these mills in America are electric arc furnaces, which use mostly high-grade iron ore. So the move to acquire the iron ore projects from Anglo is a good move from BHP point of view. The fact that they would not want the African iron ore assets suggests that they are targeting the high-grade iron ore in Brazil. These assets will be closer to the steel mills in Brazil and America. Also, BHP is convinced of the supply gap in copper, expected from 2026 onwards. The move to take over Anglo-American's copper assets in Chile and Peru will increase their copper production, and BHP will control 10% of the total copper production. One of the reasons for the recent copper price rally is due to the closure of a massive copper mine owned by First Quantum in Panama. Also, the recent ban by the West on Russian copper will reduce the total availability of copper. Electric cars are the future, and more copper will be needed overall for the green transformation. However, copper is also very sensitive to economic growth, and recession can cause the prices to fall. As you can see from the return of capital employed for copper, it is only 12%. There are also synergies to be achieved by combining the steelmaking coal assets of Anglo in Australia. BHP made a £31 billion offer for the assets of Anglo-American, which has been rejected. It is important from Muffett's point of view not to overpay for the assets. We think that Anglo expects an improved offer. We hope that BHP does not get overambitious and bid too high a price for this. BHP has a poor track record in terms of acquisition and disposal. They bought Oz Minerals at the peak of the nickel boom. They also sold out their shale assets just as the shale boom was picking up. So we are keeping a close eye on the proceedings. If BHP is able to get those assets at a reasonable price, then we think that BHP would be a good long-term investment. We hope you liked this video, and we would be grateful if you could like, share, comment, and subscribe.